$1,700,000 for an HDB flat. So that's the new record set in Singapore in 2026. So here's the part that actually makes no sense. So the HDB resale price index just fell for the first time in 7 years. So prices are going down, records are going up. So at the exact same time, so if you're thinking about upgrading from your HDB right this year, or you already own one, or you're wondering whether to actually sell now or hold, this contradiction right is actually the most important thing in your portfolio right now. So most agents are actually reading it wrongly. Most owners right are panicking about the wrong numbers. So in the next 12 minutes right, I'm going to show you exactly what an investor sees when they actually look at this data and the 3 questions you should be asking before you actually make a single move in 2026. I'm Elson Ma. I have owned a residential property and also co-own 2 commercial properties. And also being raised under like 3 generations of property decisions ranging from HDB, condo, landed, industrial and shop houses. So I'm not commenting from the sideline. I do have like own capitals on the line. And also the frameworks I'm about to walk you through right, is actually the same frameworks I use on every other deals. Let me show you the picture first. From 2019 to the end of 2025, the HDB resale price index actually did one thing. So it actually went up. So quarters after quarters, right? Year after year, through COVID, through cooling measures, through like 3 rounds of ABSD changes, the line just kept climbing. So 28 quarters in a row, 7 full years of uninterrupted growth. Then in Q1 2026, the index right hit like 203.4 and then dipped like 0.1% from the previous quarter. So that's not actually a crash. That's not a correction. That's only a tiny tick down. But this is the first time right in 7 years that the chart have actually like done anything other than going up. At the same time, the transaction volume right came in at like 6,179 flats. Result as of end of March, down like 4.5% from the same period last year. So less demand, slightly lower price, quieter market. Fine. That's the headline, right? Most agents are actually running with. Now, look at the same quarters from a different angle. Because while the average HDB owners was reading about the price decline, right, the top of the market was actually doing the exact opposite. So 412 flats crossed the $1 million mark in Q1 alone, up from 350 in Q4 last year. So 9 times hit all-time highs at the same time. The index actually fell, So that's a contradiction. I mean, once you understand, right, why it's happening, right, you can never look at the HDB pricing the same way again. So here are the numbers that nobody is putting next to each other. In all of 2024, right, Singapore recorded like $1035 million HDB resale transaction. In 2025, that number jumped to 1,544, a 50% increase in 1 year. Then Q1 2026 alone delivers like 412 more, already on the pace for another record. And the record aren't just in the obvious places, So like example, a 5-room flat at Sky Terrace at Dawson, right, sold for $1.7 million. It's like a new national record. A 4-room flat at Bedok South Horizon sold for $1.12 million. A first $1 million sale in the estate I've ever seen. Bukit Batok, Bukit Merah, Clementi, Pasir Ris, Punggol, Queenstown, Sembawang, Sengkang, Tampines. So 9 times, 9 all-time highs. And in the same quarter, right, the index fell. So how do you actually explain it? So 2 things are happening at once, and they are happening to 2 completely different parts of the market. So number 1, the bottom and middle of the HDB market, right, is being flooded with supply. 13,480 units are actually reaching their minimum occupational period in 2026. Almost doubled the 6,970 that MOP last year. Plus as many like newly sellable flats that are coming onto the market in the concentrated estates like Punggol, Queenstown and Tampines. More supply, same demand, slightly softer prices on the average flat. So that's the index actually telling you exactly that. Number 2, the top of the HDB market, premier location, top floor units, large layout, mature estate with no replacement. They're actually doing the opposite. So it's actually the supply is actually more limited than ever. So people actually bidding on it are actually bringing more cash than ever. One market, right, 2 stories going in 2 different directions. Here is actually where most agents are actually reading it wrongly. They are telling the sellers, right, it's actually a soft market. They are telling like buyers' prices are actually coming down. They are actually managing both sides of a single index number. That number is actually hiding everything that actually matters. An investor doesn't just look at one number. An investor looks at the spread between the numbers. Let me show you the 3 patterns inside of this data that actually tells you what to do. So pattern number 1, mature estate scarcity is actually repricing the top of the HDB market permanently. So when a 5-room at Sky Terrace at Dawson trades at 1.7 million, that's not a bubble. That's a buyer correctly identifying that this exact unit cannot be replaced. The land is gone. New BTOs in Queenstown will be smaller on a shorter lease with stricter resale rules. Anybody who wants to live in a matured central Singapore on an HDB lease at this size, this view, on this floor has to be here. There is no second supply. So investor takeaway, location locked HDB scarcity is now a recognized premium asset class, not an outliner. Remember that. Okay, pattern number 2, the MOP wave is the supply shock that most owners haven't actually priced in yet. So 13,480 units hitting MOPs in 2026, concentrated in Punggol, Queenstown, Tampines, and parts of Sengkang. So many of these owners will lease at the same time. Many of them will lease because they want to upgrade to a condo before the next launch wave prices them out. That's not bad news for the market. That's actually an event with a known date. So if you own a flat in one of those estates, the question is whether to sell before the wave or after. And that depends entirely on what you are actually trading into. Pattern number 3, the cash buyer is back. So they are actually changing the geometry of the bid stack. So to buy a $1.7 million HDB, you need to cash on top of the CPF and a Titan LTV. The HDB LTV moved from 80% to 75% in August 2024. And also, the TDS now is locked at 55%. So which means that the people setting this record are actually doing it with serious cash position. They are mostly upgraders, downsizing, retirees, consolidating, or family pulling generation wealth into one trophy unit that they intend to hold forever. So they are not just flippers or they are not just first timers, and they are not coming back to bid on a 4-room Punggol. Different buyer pool, different price ceiling, different market entirely. And that's one number nobody is showing you. Out of all the $412 million HDB resale in Q1, the vast majority cleared in just 9 towns there. So which means that the price contradiction isn't actually spread evenly. It's concentrated in a list that you can almost name in one hand. So that changes everything about how you think about your own flats in 2026. So if you are HDB owners watching this right now, here's how I translate the data into a decision. So quadrant 1, you own in a mature estate, like example Queenstown, Bukit Merah, Clementi, Tampines, Bishan, etc. You're past the MOP. You're sitting on the asset class that just got repriced upwards in 2026. The index dip is not your story. The records are your story. So your job is not to panic. Your job is to understand what your flats is now worth and to decide whether you want to harvest that value or compound it. Quadrant number 2. So you own a mature estate, but you are not yet at the MOP. So you're holding. The wave coming behind you in the non-mature estate is not yours. Time is on your side. Okay. Quadrant number 3. You own in the non-matured estate hitting MOP this year, and you are inside the supply wave. So if you're upgrading, sequence matters more than ever. So sell first, buy first, or bridge. Every option has a real cost in this market. The wrong sequence, the wrong move can actually hits you with 50 to 150,000 on the wrong side of your sheet. So you want to avoid that. Quadrant number 4. So example, you own a non-mature estate, not yet MOP, you hold and we watch. The market is going to get noisy over the next 12 months. And most of this noise is not about your unit. So don't make a decade-long decision based on a quarter of headlines. Same data, 4 different action plans. So this is what the index alone will never tell you. So before you make a single move in 2026, here are 3 questions I'll ask if your flats were mine. Question number 1, is my unit in the scarcity pool or in the supply pool? So mature estates, large layout, high floor, irreplaceable view, that's scarcity. Generic, non-matured 4-room in a town with thousands of MOP units behind, that's supply. So the data treats those 2 as the same asset. The market does not. Okay, remember that. So question number 2, am I trading up, sideways, or out? So if you're actually trading up to a condo, the price you sell matter less than the price you buy. And of course, the OCR new launches sold about 80-90% on opening weekend at over 2,500 asset. So if you are trading sideways into the HDB supply wave, the HDB supply wave is actually your friend. So you're actually trading into the cash. And if you're actually really asking when the next entry price is, that's actually a whole different conversation. So question number 3, what happens to me if I do nothing for the next 18 months? Most people actually skip this question. They shouldn't. So for a lot of mature estate owners in 2026, the right answer is nothing happens. That's a feature, not a bug. Okay. For owners inside the MOP wave, the right answer might be a window closes. So the point is to know which one you are in ultimately. So that's the investor's mind on this quarter in plain English, if you ask me. So if you want a full version of this, the same checklist I use on my deals, the one I walk through for my clients every time they sign anything, send me a DM below on the link. I will send you the exact framework I used to build this video. And of course, if you're thinking about upgrading, restructuring, or buying the second property in 2026 and you need a third person opinion, I am always one call away. And also, the link is also below. I will took a small number of appointments each week. So let me know in advance. Subscribe because I publish 1 or 2 of these videos a week. So I'm Elsama. 3 generations of properties, 1 decision, 1 camera. My own capital is on the line also. I will see you in the next video.